All right, we're in the middle of March, March 15th. We rolled out of some of those specifics in just looking at something simple like the head fake and the long up down bars and stuff like that. And this comes a lot from this event. This session comes a lot from talking to guys and identifying weaknesses in people. That's what good community is about. Unless you have it, you're not going to find strengths and play to them. You're not going to find weaknesses and address them. That's what is your step one. This, and let me repeat this throughout the session, isn't a step one. Where's step 2, 3, 4, 5? This is step one, and that's the only step. All right, yeah, are there other subsequent steps and progressions? Absolutely. But they become a little less mechanical or absolutely irrelevant unless you have the perfect, and I don't mean to use perfect, but really good step one. All right. Just for guys live, FOMC is important. You guys that aren't in the trading room and just come to these meetings, that's fine. Just remember FOMC is tomorrow. If you're not prepared for it, get prepared. Right now, Goldman Sachs is looking for a rate hike, not this meeting, but in June. There's big divisions among the Fed between doves and hawks that came out from last meeting. So they can't agree on a lot of stuff. Upside, downside risks to the economy they're having trouble agreeing on. So the rate hike was supposed to come every other meeting when we had our first one in December. Well, this would have been every other meeting, and yet they're not going to raise them. And we knew that after the volatility early in the year with China, and now we come into maybe not till June, which means a couple meetings out. Goldman Sachs thinks that's the most likely next rate hike of 25 basis points. The tone in the statement and the subsequent press conference that Yellen's going to give at this meeting, 1 Central is the statement, 1:30 is the press conference, is going to be watched. They're not going to raise rates. If they do, it's really, really a surprise. But they're not going to do that. Their tone of being a little more hawkish could be bearish for stocks and bearish for bonds, especially the short end. So keep your eyes and ears on preparing for that and also trading that and understanding the why and the where and the when that statement gets released, and then when she starts giving her press conference, Q&A, and all that stuff. The Fed funds futures, which prices in the probability of the next rate hike, is about 50-50 for the summer meeting. Goldman Sachs is leaning towards a probability in the June meeting for the next hike. Fed funds futures has a 50-50 chance of it. But that's where they're at. They're having some infighting, it seems, from inside sources that they're not agreeing on upside, downside risks to the economy, let alone where to go with rates. Remember, they can't raise rates if some of their economic measures aren't doing that well. The rest of the world is in loosening monetary policy, all right? ECB, Bank of Japan, Bank of China, all of them. Even the Bank of England was a little dovish in some of the remarks, I think, today. Our Federal Reserve is in tightening mode after December, and now they're pushing those things back. So it's a lot of cross currents between global central banks as to policy. So they're in a tough spot. Now, if inflation upticks, that's what they want, and I don't mean they want it and they're cheering for it, but if they get that, that's justification for raising rates to take some of that money out of the economy, because that's what inflation is. Too many dollars chasing too few goods and services, prices go up too fast. Inflation hasn't been a problem since the financial crisis that began in 2007. So let's jump back from real time, and again, this is important for those watching live, those in the future watch this meeting. It's good to know how to prepare for a central bank meeting, but obviously by the time you watch this, that meeting might have come and gone, and go back and see what had happened. But getting back to the topic of this meeting, this is also a session that just isn't going to start and end today. I'm going to look for guys to give me their step one, not today, but subsequent meetings. George, I think he'll do it. What's your step one? We all have a common, since you've been through this educate, we're all going to have a common denominator and really strong foundational reasons to get in and out of trades, but they're never going to be exactly the same. Like I've told almost every one of you, you can't trade like someone, but you want to think like someone who knows what they're talking about, that help you click, turn a corner, light bulb, trade better, stay better, read better than the rest. It could come from the most unlikely person that says something that you might have heard 4 times, and the 5th way he said it, she said it, clicked. So other people's step 1 is important. I'm going to go through mine, but you're going to have something that's similar, slightly different, but some very common overlaps. And I put the title Ready, Aim, Fire because it's not ready, it's not aim, it's fire. It's that progression all under the first step. Okay, so let's get rolling with this. And we're going to try to create a more mechanical reason to sit up in your chair. I'll use the metaphor, what's going to get you to pick up your gun? You're watching a chart, you're watching a dome, you're watching both, it's really nothing, neither here nor there. All of a sudden, something happens in a game that gets you to start paying attention. Something happens out there when you're hunting for deer to make you, pull your gun up or pick it up, so to speak. All right? And you can't get into a situation where you don't know when you look at a chart when the market gets into your space. That's what that means. If you're watching baseball, all right, and baseball's a lot like trading because there's a lot of action and then a lot of nothing. If you guys know anything about baseball, right? There's a lot of action at times and then there's a lot of nothing, but you can anticipate when there might be action. There's a guy who's kind of fast at first base and the ball gets hit into the gap. Well, this guy's running around the base. He had a chance to score, but it's not easy to score from first. Guy's got a strong arm. You're anticipating some action and you're getting it. You're not talking anymore over a beer and a hot dog with whoever you went there with. You're watching the game. You're cheering. You're excited. There's something that's probably going to happen. You know that, knowing the game and knowing the conditions. Well, what is it in trading that gets you to sit up in your chair and start knowing that there's going to be a play at the plate? Where's the market going to, when the ball is hit, that's the arrow of price. This arrow is price coming into your box. Not your physical box or rectangle, just into your purview to make you sit up and grab your gun. Then secondly, and you could kind of think of this as you go through your progression, where is it going to leave that box? Because it's going to leave it one or two ways. It's going to go and leave it to the upside, or it's going to leave it to the continuation of the downside. If you're fading a move lower and you buy it, it could continue to the downside and follow through, or it could bounce. But what makes you sit up in your chair when price enters your strategy? And then where the hell is it going to leave? Both for a winner, a loser, and everything else in between. I repeat this. When does a market price enter your space? And when, where do you expect it to leave? Targets for this session and ongoing sessions that are like this one. So these sessions will be called step 1. This isn't the only one we're going to have. I'm going to force some people to come in and give me their step 1. Not today, but after they prepare theirs. George, I know, would do one. I know there's some other guys that, whether they've been making money or some that are close, some that are scratching, some that are close and losing money, or some that have made money in this course and program and community, will share theirs. And even if you don't share yours, you gotta have one. You have to have it explained. You have to have politicians call them position papers. Well, those are usually fluff and crap, but you got to have your position paper. The targets for this session and ongoing sessions that relate to step 1 is, could you imagine someone who is training to hunt a deer blaming the deer for moving as the reason why they didn't hit him? Could you imagine that you were training to be a deer hunter and the guy training you said, what happened? And you said, well, the damn thing moved. That's what people do in trading. They'll look for anything else to blame than they sucked at that moment or they weren't good at that moment. And you don't, and your mind makes you do that because it doesn't what? It doesn't want to make you feel bad, insecure. Everybody's got some insecurities. Some have a problem with it. Some don't, but we're all human. We hate being wrong. We love being right. So your mind's going to get you to blame something else. That's the path of least resistance. You could be trading a method that's working, and then a trade doesn't work, and you make 3 trades outside the method, and you blame the method, and you didn't even and it's not your fault. It is your fault, but it's not your fault for blaming it in a reactionary sense, because you truly thought you were taking trades within your step 1. You truly thought you were taking trades within your strategy and plan, because your mind is so powerful in telling you you could drive home. Yeah, you're drunk, but you could do it. You know how to drive when you've been drinking. When you make important decisions and you're drunk, you're going to make bad decisions. And that's why people don't get it when they say, why'd you decide to drive home? Well, because he made the decision when he was drunk. He didn't make the decision when he was sober. He made it when he was in a bad disposition to make a good decision, right? So don't kid yourself. Sometimes you're wrong, and it's like you'll stack up reasons why you're not. You need better self-reflection. Another bullet point. This session is more, this is important. It's more for knowing when you take trades outside your plan than inside of it. This isn't about always catching opportunity, although that's some of it. It's about when you are doing in a more mechanical way something that is against what you plan to do. Now you have a fight and a chance to beat up your mind in it trying to convince you that the method stinks, or the whatever your method might be. But you know what? I were really trading my setup. I'm better at knowing that this was not a setup. This was an avenge trade. This was I missed a trade just a moment ago. I got to take something to make up for that trade. So that's what these sessions are going to be mostly important for, is knowing when you're taking trades outside your plan. So now you can be more objective as to what the hell kind of read you have. Is it good? Is it bad? Or does it absolutely suck? Or maybe is it okay? But objectivity is really, really sparse in this business, because you're trying to be objective and you're anything but. You're anything but. You're trying to make good decisions and you're drunk. So you have to understand that going in. So that's what these sessions are about. Knowing when you're making bad trades that don't fit within your setup. And here's let me expand that. Let me elaborate on this point. Why do we make trades even when we sometimes know this isn't the setup? Because sometimes they work. We wouldn't make trades if we knew that this was a trade that when you make it, you lose money every time. Everybody would be eventually smart enough not to take those. But because they work sometimes, they get you to do it again. They don't work all the time, and net you get killed, and you never could objectively analyze and grade a setup. How could you grade a setup if you're not taking most of the setups and you're taking some that are getting you beat up emotionally, causing you to miss a setup because you took something that you couldn't identify as a setup, right? How could you properly grade that student? You couldn't. So you have to be objective, and you have to know when you're taking trades within your setup and those that are ones that, well, they work sometimes, but they're an absolute disaster when they don't work. And that's net most of the time. If you took all your revenge trades, all your trades outside what you tried to do, all your trades because you missed a trade, all your trades because you couldn't get out of a losing trade, that's a trade too, right? It started out as your setup, but it wasn't completed, and you held on to that damn thing. You added to that damn thing. You took a much bigger loss because you now were outside what your plan was. So it could have started out with your plan. It's like, hey, I picked up the gun to kill this deer because I seen the deer. I got ready, I aimed, and then I looked up and shot a bird. I missed the bird and the deer ran away. Well, what the hell are you doing? Well, I just, felt like shooting the bird too. I was going to shoot both of them. So you started out right, and you messed up the back end of the trade. And then you say, man, shooting the deer is tough. Of course it's tough when the back end of your plan is totally obliterated and you don't realize it. Next bullet point in these session targets. The reason why I do these session targets is because this isn't going to be the only class on this topic. Are you shooting when you shouldn't even be holding the gun? You shouldn't even have the damn gun in your hand and you're shooting away. How often does that happen? And what's more dangerous is it's happening, you'll realize it. So if you say to yourself, yeah, that happens a lot with me, I guarantee you there's a lot of other times it happens, you don't even realize it. Because what we said earlier this year, self-reflection is always bad. It's tough to self-review. And there's no accountability in this business, or there's a lot of accountability in this business, but there's not from a employee-employer standpoint. There's no, well, for you guys, real boss that you have. I had one called a risk manager and then the owner. They were my technically boss, where they could shut you out, shut you down, calm you down if you weren't trading well. Kept missing days. There was a guy that came in, they hired, and most of the company was making really good money. Most of the new guys were coming in and turning the corner pretty quickly. This kid had the world on a string. He was just out of college, got this opportunity, and the guy would fall asleep in the meetings that the owner was talking at. Or he did it once. And then he'd come in late, and he was falling asleep at his desk while he was trading or trying to trade. And the owner came up, tapped him on the shoulder, and fired him. So my point is that guy would have lost a lot of his own money if he didn't have someone to tell him, get out of here, right? He would have kept trying to do this, and he'd have lost 10, 20 grand, whatever is an uncomfortable amount for you, you'd have lost because you didn't have someone to cut the losses. So are you shooting when you shouldn't even be holding the gun, let alone aiming it and firing it? That's when your trainer would just, as you got the gun up to your face and ready to pull the trigger, he'd just pull the gun down, pull it down. It's like, what are you aiming at? Well, I think the deer is going to come into this space. Yeah, well, there is no deer within 10 miles. We're not even hunting deer. That's how crazy trading is. That's how crazy your mind gets. You're not even you're thinking you're hunting a deer, and you're not even supposed to be holding the damn gun, and you've got trades on. And you still think that it's within the setup, and it's not. So here's a couple answers, not to questions necessarily, but answers to what does it take, and I briefly touched on this to get feedback from pilots, because pilots is a popular crossover career in our community. What is it that you guys, you could type it in, but I know the answer because I asked you. For pilots, what happens to get you to sit up in your chair to begin your descent? And they told me a formula that measures speed and distance from the airport. And he said, Carol says crew meals, right? So there's a progression that a pilot will go and run through, but not until he gets to that point, till they get to that point when they have to kick off their progression. Doctors, we got the doctors in here, the anesthesiologists. Where are they at? You guys here? Neither one of them are here. Come on. Well, you're not going to want me as your anesthesiologist, but I'm going to assume I know the answer to this. They're sitting over surgeries, right? They've given their patient the anesthetic they assume to be the right amount. What is it that's going to get them to say, uh-oh, they're coming out of it? They have to react. Probably vitals. Let's say it's the blood pressure goes up. That makes the anesthesiologist in that surgery sit up and get out of his Edge Tuesday meeting that they're probably in and say, well, hold on, I got to go and save someone's life. But the blood, all of a sudden they went through whatever their then progression would be to give the proper anesthetic to that patient. And I'm just making up a patient wearing out a pain the painkiller coming out of it. I don't know if that happens. When it happens, maybe the blood pressure gets the doctor to do what? Start rolling through what they need to do to give them more of it, to keep them asleep. In Chicago, they just hit him over the head again with a bat. It's another swing. Now, traders, what is it that we need to do? All right, what is it that specifically I want to do? I want multi-swing highs and lows. They don't have to be daily highs. They don't have to be 60-minute highs. For me, I just want to see clear highs and lows like we kind of had today, and we're going to go over a couple of today's instances. I want to see those. Those to me are cliffs. And then the ice before that cliff might be the head fake, the long up down bar, a big lot getting stuck. That's going to be the potential when that the herd of animals are going to slip towards the edge of the cliff. And then always, where am I wrong before I get in? My exit for a loser before my entry. So I'm right here, and you hear me say pop the champagne. Longs will pop the champagne above here. The shorts will pop the champagne below here. But where is the champagne going to get whacked over your head? That's where you're going to get out for a loser. But at least you got that part of your plan. So what do you do? What do you do when you have that part of your plan? You manage your risk, and you prevent and certainly maybe even eliminate the adding to a loser, hanging on to the loser because the damn thing didn't work, and because you didn't have that part of the plan of the setup, you let it get away. Going back to the example of you're ready to shoot the deer, and then last second you go up and try to shoot the bird. You don't even know why. You screwed it up. You had it. Losers are good, not if they're big. And you let it slip because your exit isn't identified for a loser before the entry for the trade. All right, so let me go through mine. I think some of you guys know it, see it. You know, when we go through like there's always better articulation of what someone's trying to do as they learn or as they teach and as they talk. And it's just like, well, yeah, that's what we're looking to do to see the other side stuck. I know that there's two swing highs. Let me get a pen. I know there's two swing highs on this chart, right there and right there. All right. I know that this is a cliff, but I'm not doing anything. All right. And then all of a sudden, the market does this. I'm starting to see some structure within the structure. I'm also starting to see or looking for a potential head fake down to go up or a long down up bar. In this case, it might just be structure within the structure. I'm looking for the highs to be the cliff, to be where shorts ultimately puke because it went up there once and it went up there twice. All right. I sit up in my seat when I start to see this, because in here you could get the head fake potential. You can get the long down up bar potential. You could get a big seller to come in and it won't go down. And then you have the ice, which is the structure within the structure, which the high of the structure, I should say. So this is the overall. This is the smaller one within it, and this is the ice, and this is the cliff up here. So this is getting me to sit up in my seat. Ultimately, I want this thing to stay above here if I'm going to get long. That's where my first thought of being wrong would be. Secondly, I need it to stay above the middle of there to be right. If it's just playing a breakout, no head fake in this example, long up, down up bar, whatever. But I'm sitting up in my seat and I'm this bullish, and now I'm looking for when to get long, but where am I out for a loser? And this first X is the one, and this second X would be the second, if indeed I could get long above there, right? Depends. If I get long below here, it would be this X. If I get long above here, it would be this X, right? I'm not, just because I sit up in my chair doesn't mean I start clicking the mouse, right? Just because the pilot is the distance and time away from descending doesn't mean he pulls that what's it called? Yoke, Carl? And what do? Pull it back to go down? You pull it back to go down? You don't yank that thing back to you. No, you push forward. Push forward to go down. So you don't push it forward to go down just because you're the time and distance away from your descent. You don't sit up in your chair because you see this, or at least I don't, start click, 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 click. But you sit up in your chair. This is juicy to me. This is people stuck or people who are short going to be nervous above these two levels. And then we've got this within. I'd like to get some more people stuck to create the buying to bring us up to here, and then the buying to shoot us through there would be from the longer term shorts, also seeing those swing highs. Now, hold on a second. If I added a couple more bars, and what do I mean by adding a couple more bars? Let's say this is that you could start to see this box, right, form in the middle of the box and everything else. But let's get rid of that a second. Let's say that you had a bar that did this. And then wham. Oh, shoot, that's not right. Bar that did that, and then wham, came up through it. What is that? A head fake, right? Because it got the bottom of this to get taken out. You sucked in some shorts, you shook out some longs, and you came right back. I'm aiming to be long before that and looking to pop more champagne above these two. That's using the head fake that I've sat up in my chair looking for, anticipating to maybe happen. But that's not the only thing I'm looking to happen. I also could see a big seller as it, it's just, maybe it doesn't do this. Maybe it does this. And I see a big seller come in, sells it, and it can't go down. Well, I'm already bullish and sitting up in my chair anyways. That's a price selection. I know where I'm getting out for losers. Another way, or another idea. The ancillaries are working well. Bonds shoot down. I already want to get bullish. Do you see how this is not so artistic now anymore? How you're inviting some mechanics to the process. You got to be able to see the mechanics being laid out in this process. How is Anthony thinking? You guys are in my head maybe more than ever before. Let's go to this slide. Important helper, which is what? An ancillary. Let's say the ancillary is doing this. This is another thing that makes me sit up in my chair. I don't give an SHIT where the market that I'm watching is structure-wise or doing this. Let's say the important helper that's been helping us find good trades or get out of good trades or whatever is doing this. Just sideways, back and forth. And then wham, it does that. Well, when the wham, it does that happens, you better sit up in your chair. Then you also have to know where your market is in trouble and have to know that at all times. Not where you're in trouble. Where is your market in trouble? Where are the buy stops potentially above, the sell stops potentially below? Or, in this case, the shorts are in trouble, and where are they really in trouble based on the bonds slipping lower? You don't have to be in a trade, nor do you have to have an opinion to be able to look at a chart pretty quickly and at all times have a good, pretty solid, high probability assumption of where shorts and longs are nervous. Be able to look at a chart, could be your station-to-station chart, could be a 4PNF, could be whatever the heck you use, and you should always know where your market is in trouble. Because if you don't, then you're not going to profit off of those. The market being in trouble is what? Most of it being caught the wrong way. If there's too many sellers, the shorts there's too many sellers or shorts, let's say, then the shorts are in trouble. Where are they in trouble at? If you don't know that, how are you going to find the opportunity to find a good location to have people puke their short positions after you open up a long position? have people puke their short positions after you open up a long position is generally the very dynamic that makes a profitable long trade profitable, period. So this is an instance that if I'm already sitting up in my chair, this sequence in here might get me to fire away. If I'm not sitting up in my chair and I see something break out, that's been a helper. It can get me to sit up in my chair. And at all times I know what, or could quickly look at a chart, and that's how you know how to read a damn chart. And you say, how do you read a chart? This is how you read charts. Knowing where people are stuck, building the structure quickly without having to be a market or volume profile expert. You ever hear George when he talks about, hey guys, I got a good read on this market? And then most oftentimes he does. Or when he says, I really don't know, I don't have a good read on it, because he doesn't. It's like you read a story, you're really not sure where the author is taking you. I'm really not sure what price action and what it's telling me. I gotta read another chapter. You know what? I'm gonna put this book down and go snowmobiling, whatever. But you're not always entitled to have or necessary to have an opinion or have a great read all the time. Now let's go to a real, or go to today's charts. It's March 15th for those watching in the future. The market's in trouble right now below here. I can tell you right now, I haven't looked at a chart in over a half hour. The longs are in trouble below the middle of this consolidation, which is 99.75. Why? Because it just popped up and it shouldn't come all the way back down through the middle of this pretty clean consolidation in here. Let me change my pen color to yellow, and then you could see this clean consolidation on a 4PNF right there, right? Through the middle of it, they're going to attack the open and these lows, so that's where the longs are in trouble. Now, today, I had this purple line come in here, purple zone, brown levels are in here. I left you guys about an hour ago with some of these levels. Let's open up today, because today really didn't get away from the open. And it has a little to do with tomorrow's FOMC. Value is pretty much priced in what the heck's going on. So let's just look at this market. This is the E-minis, of course, right? This brown line that we put in here worked not only once, but it worked twice. We get rid of it. This brown line in here we put in worked once, twice, and then it started to go through it. We get rid of it. This green line in here worked beautifully in here, got a little bullish, held it again, wasn't going to hold it forever. There was a few 4PNFs that popped back through it, and then we got weak again. We can get rid of it. At some point, though, this guy is bullish. Shorts are in trouble above 0175. I never say guarantee you that. High probability, though, 0175 is like a drop ceiling we're going to blast through if they can get back up there. This brown line should now go to there, around 99 even. And what do you know? It's probably right in line with the middle of this fight. And it is. 99.75 roughly. So coming back in here, we see that the bulls will stay comfortable above 99.5 roughly. And they want to get it too, and the shorts are really nervous above here. Now that's what's going on now. Let's go back a few beats here. I missed a trade that was a sit up in my chair moment, but missed it. You guys hear me miss trades. Every trader misses trades. Opportunities that are missed are your worst trades because you often do something stupid after. I'm good at minimizing the stupid after because I'm good at tricking my mind a little bit to know, you know what, you dummy, if you would have bought it there, you wouldn't try to be buying it on the way down. So why are you doing that? But here's my point, and this fits right in. I prepared those slides over the weekend, and I've been thinking about this webinar, this class for the last few Saturdays. But I look at this and I say, this was a chance to go lower. We couldn't. Soon as it got the hole in the box to the upside, all right, we had some really good juicy swing highs that were sitting up in here, and there's a couple beyond there. All right. So, all right. It's hard to get long in here because you kind of should be bearish in here anyways. If you're not, whatever. You shouldn't stay short as it leaves this consolidation, but it does. It starts to create a new consolidation. That's got to get you sit back up in your chair, and it did. A lot of you guys caught this. Sit back up in your chair. The ice was right in here above the consolidation box. The cliff was right there, that it had good continuation once it got through. And 0275 was the high of the move. Now, this green line wasn't there at that particular moment, I don't think. Either way, this was sit up in your chair once you recognize this second box forming for this swing high to get taken out. I created that slide Saturday, and then the same thing sets up the very same session. This happens all the time. And then you'll go back and have to find an example of a setup you like. You're not going to be trading too much. And that might be fine for you. Might be absolutely perfect for you. If you have to look really far back to examples of a setup you're looking to sit up in your chair for, you're not going to sit up in your chair a lot, and that might be fine and help you fit to your time frame and style better. So you see this in real time to anticipate this market, especially at some point if it stays above the middle of it, and then something else happened. Now this is pretty mechanical. It's got to seem more mechanical than the first day you came into the edge course. What time was this? Hold on. What time was this? Around 9:30, roughly. A funny thing happens at that time. If we were in a prop firm, I would be using some strong language. If it was a bunch of guys in a prop firm, I'd be using some strong language. And the strong language would be, listen, with some adjectives. And I would be mad that if you didn't see that there was a swing low here, oh, that's not good. There was a swing low in the bonds. This is the bonds, remember. Right there and right there. And you didn't see that they could go through there. At the same time, we had structure and a cliff. Look at all these cliffs, for crying out loud, all the overnight cliffs. And we had structure. The shorts from in here were nervous because they don't know what they're doing to get out. I was short from in here, but well out before this box. You didn't see the structure in this box right there with the cliff there and the breakout potential there. And then the good old-fashioned 30-year bonds also had the same thing, only to the downside. If guys were honest and said I didn't see that, I'd say, well, not guys, you guys in the meeting today, but prop guys, I'd be like, well, then you better work on that because that's an ideal setup. Ideal setup. You got ancillaries to push you through, help. That's why they're helpers. It needs to go down for the ES to go up, and it did. Those are the moons you want to line up and the reactionary stuff that you're making diligent reactions to instead of avenge trades. So now if you do that trade and it didn't work, that's a good trade. Here, this is a good trade. This is a good trade here, and it's a loser. Taking that consolidation. Remember, we obviously don't know that, but what we do know is this market has unbelievable downside potential if it can get realized through these swing lows and through what was becoming these three lows. For crying out loud, get short there, great. But know where you're getting out, and where you were going to get out was based on time, the bonds, and I think it was the bonds down-ticked pretty heavy. Not for this move up there, this one, to get you out because we were going to exit this consolidation to the upside. And look at all the time that it had. You remember me in the trading room saying, you mean to tell me that this market is not going to go through when it does it there, 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 there. Yeah, sometimes it does. Nothing wrong with sitting up in your chair looking to pound this thing through the ice. There is something wrong if you're still short and the damn thing's here, or hell, even there, because you actually should be somewhat bullish, if not bullish, let alone you're short. And you know why you're bearish? Because you're short. If you're only bearish because you're short, then your mind is holding the leash over you. You should be bearish not because you're short. You should be short because the bonds are strong, there's sell stops below here, and there's that explanation that you could go ahead and explain to your co-pilot who's learning how to fly the plane and understand why we're going to prepare for landing. I had an explanation of what I do, all right? I pretty much could explain this to a novice, and not nearly as much detail, right? But I mean, I could explain to a novice, and here's how I would do it, about what I look to do. Anthony, what do you look to do? And I'll be like, look to do what? Well, you trade. Give me an idea of a trade. Well, my first thing is I make money on people losing money. So I want to see where they're kind of stuck and have to get out of a position. Plus, I like correlations. So when one market goes down and we go up, then I want to jump on it when I notice that one went down so I could buy something else. I think any novice could understand that's what you're looking at on the surface, right? But that's not obviously enough for them to take and run and trade it and learn the strategy, but enough to say, oh, I get it. Give me some more information. Tell me more. They're interested. All right. Well, if you're interested and you're going to listen to me and I'm not going to waste my time and I'm talking to them and I could tell that they're interested, I'll be like, well, here's the thing. I said, when you want to buy a stock or when you want to buy anything you trade, you got to find like, hey, what if like Apple was like real weak after earnings and then it shot back really quick. That's pretty strong when it should go down on weak earnings and doesn't. I think people would get that. Yeah, it makes sense. It should go down with weak earnings, but it doesn't. So I thought if you're like thinking of buying Apple stock, that might be the day to do it. It should be weak and it wasn't based on reaction. Oh, here's another one for you. The NASDAQ and Apple are the same. They're going to chart similarly. And so when Apple goes down and the NASDAQ doesn't, maybe Apple's getting cheap. I think most novices could understand that relationship or how you're using relationships to sit up in your chair. Now, you don't have to be experienced if a pilot's telling you that to know what all the dials on the instrument panel are about or what all the vitals and all the tubes are going all over as a doctor in a surgery. But we're not explaining that. If a doctor told you, yeah, when blood pressure goes up, I immediately check the intake on how many CCMs that I'm giving this poor bastard. And I up it, especially if I don't like them. I don't know, right? Whatever they look at. They're not going to tell us in detail because we're not going to understand it. You guys get more detail because you're understanding it more. But here's my point. If you can't explain something like that to a novice who's interested, where they can have an understanding of what you're doing, then how the hell are you understanding it? You're not. You're not. I want people to write out their own step ones, and I don't want it handed back to me like I'm some teacher. I think it's a good exercise and a really good drill to write out or at least walk through what your step one is. What makes you sit up in your chair and grab your mouse? And boy, make it simple, please, for yourself. And then build on it. Don't build on it with step 2, 3, 4, 5, 6. Just build on it with all of it step one. All of it step one. Step 1 to get in the trade. Step 2 is going down to get out of a trade. Here's what I mean by that. Step 1, this is why we call it step 1. Step 1, most people will be like, well, what's step 2 and step 3 and 4 and 5 and 6 and 7 and 8? Listen, this is a one-story game. Step 1, step 2 is going down. So here's step 1. Step 2 is back down to where you were, right? Because you're flat, you're in a position, you're out of a position. If you got too many steps, you got too many things to screw up. More steps, the more screw up, the further you're going to fall. One step up, one step down. What gets you firmed up in your chair to get ready? Pick up that gun, put it to your face, and shoot. I missed it. It's all right. There's another deer coming. At least you didn't shoot me, right? At least you didn't shoot the guy with the orange jacket that you thought was a deer. It's just a fellow hunter. Losing trade should be like missing the deer, but not hitting the fellow hunter. And most people hit the fellow hunter too much. Or a lot of people try to hit the deer absolutely perfect. You know what? Just kill the damn thing. And those that are animal lovers or gun haters, this isn't a political metaphor. It's just a metaphor. And at some point in history, everybody had to kill something to eat something. And that's what trading is. You got to eat what you kill. So that's why I use it as a metaphor. George, are you here? I know you're here. I don't know if you're in front of your screen. I seen your name in here. He must not be in front of his screen, George F. So we'll talk to George about next week walking through his step 1. I want you guys to volunteer. Who wants to volunteer to do not one next week or 2 weeks? Just do a short 5-minute step 1 as if we're a bunch of novices and you're telling people what we're doing. We've got a couple. Good. And it's not bad if you don't volunteer at all. There's no brownie points here. It's just those that are comfortable. Perfect. And I want you to think it through. You're not putting on a 30-minute presentation. You're not putting on a 5 minutes or less. 5 minutes or less. Look at this. I like it. 5 minutes or less, just what makes you sit up in your chair. And by preparing for that, you're going to get better at recognizing it. Does that make sense? So you might know what your step 1 is, but you're not good at recognizing it as you should be. So what do? What do? You miss a lot. You miss it. Carl, yeah, we passed that threshold when we should have been landing like 30 minutes ago. Oh, shoot, really? Yeah. You knew what to look for. We missed it. If you're better prepared at what you're looking for, you're less likely to miss it. If you're driving down the street, you're not expecting to see the guy, and it's dark out, then you're not probably going to see him. But if you know your buddy says, this guy has got a black outfit on, all right, and fluorescent shoes, and when you see him, we're going to shoot him, okay? Because if you don't shoot him, he's going to shoot us. So you're driving, you see a guy wearing a black shirt and black pants, boom. At least you got a chance of seeing him, right? If you're not looking for him, you ain't going to see him. You're prepared to look for what you're trying to find. I'm going to end the recording for you guys watching it at some point in the future. Look back on, do this for yourselves, prepare for it, and I look forward to these additional classes where these guys actually do it. So we'll sign off with those guys right now.